robots in factory and commercial environments to gather data. And as you think about that 2028 commercialization target you shared at CES, how important is that data collection and gathering for hitting that timeframe? Thank you.
I think it's a very interesting question. We've had 2 weeks since the announcement at CES, and I've received reach outs from a significant number of customers asking about our interest and readiness to support on-site pilots and proof of concepts, and kind of starting from our industrialization partners that want to contribute in manufacturing in components because they understand we do the full robot. Starting from that and really trying to attract us to work with them for manufacturing, and for all of our industrial partners, whether it's tier ones, OEMs, and others that want to see how they can work with Mobileye in integrating robots into their logistics centers, warehouses, manufacturing lines. The need is definitely there, and for them it made perfect sense. I think one of the encouraging signs that we've seen is that already at CES we've had meetings with OEMs, and in most of these meetings it came up as, let's take a follow-up and schedule when we can actually talk about a plan to deploy this in our environment. And I think that the fact that they know Mobileye from the automotive business and they trust the standards of the company, and that they have a need for longer term finding solutions for human labor that is becoming a bigger and bigger problem for them, especially in developed countries, this gives them an easier path to evaluate a new technology with a partner they trust, as opposed to working with a startup in humanoids that who knows what you can get from them and whether or not they can deliver. And definitely we're leveraging these relationships. So we definitely think of this as an area to continue to develop in the next few months.
Thank you.
Thank you, Mark. Next question, please.
Our next question is coming from Chris McNally of Evercore ISI. Please go ahead.
Good morning. This is John Sager on for Chris McNally. Thanks for taking the questions. Amnon, you've made this sandwich analogy for ADAS and AV demand, basically with high demand for surround at the low end or drive at the high end. If we could focus on just drive for the time being, you guys announced VW Moya, one of the 2 big partners, Marubeni, and an unnamed OEM. But the forecast is for a fleet of 100,000 AVs by 2033, obviously a bit of a ways away. So my question, can we get a sense for what the near-term demand for your drive system might be for just like the next 2 to 3 years, 27, 28, or on phase 1 for on the growing list of cities?
Well, we announced together with Moya 6 cities, to expand to 6 cities in 2027, and that includes also Los Angeles together with Uber. We have another high volume program with Holon that will come 6 months later. We have also its expansion. As the CEO of ADMT on stage mentioned that they foresee about 100,000 vehicles in the next 8 years. The exact numbers of the rollout will depend on the success of 2027, the deployment of the first 6 cities. But we are talking about thousands of vehicles to start.
Just to add to this, I think it may be somewhat challenging to understand what it means 100,000 because it sounds like a big number. I think what we're taking away from this, what it means is that Volkswagen have in place the manufacturing capacity to produce as many vehicles as needed. The 100,000, if we're successful in 2026 and 27, and then in 28, which we have high confidence in our chances, means that 100,000 can also be a small number in hindsight. The manufacturing capacity they have and the funding they've put into this in the past few years to build everything needed to produce robotaxis in scale, eventually it's Volkswagen. So they can produce 10,000 per year, 50,000 per year, 75,000 per year when the demand will be there. And the demand from mobility operators, TNCs, municipalities is far greater than tens of thousands per year globally. Once the technology gets to this maturity level and allows quick economic and geographic expansion, which we believe we have clear advantages in, then the numbers the demand will not be a problem, I think. And we have a partner that can scale and give the supply at the best extent possible.
Understood. And just how should we think about like the volume for a phase one launch? And like should that be like 1,000 to like 1,500 like Waymo in San Francisco?
You can think of it as a few hundreds of vehicles per city as a good testing, as a good measuring stick. Just also seeing how Waymo roll out, that's roughly the numbers they've had. In some cities it's 200, some cities it's closer to 500. That's a sufficient number to kind of facilitate for the mobility demand in that city and also to build a meaningful business. And that's also roughly what we're planning.
And
thanks, John.
Just one last follow-up. Do the AV customers pay for anything before the purchase of the $45,000 drive content, like R&D in advance? Or do you get any protection if their volumes are less than planned?
Without going into the details of our contracts, we're delivering samples and engineering samples throughout the year, and there is an engineering budget that covers the direct engineering costs and development costs. So there is definitely a good amount of investment well before the commercialization. So I think when we have high confidence in our chances of getting to driverless, so I think we're not that concerned about the downside potential.
Okay, thank you so much.
Thank you. The next question is coming from Joseph Spak of UBS. Please go ahead.
Thanks. Hello, everyone. Just to maybe talk about a couple of more near-term things. Obviously, memory has become a larger issue and concern in the automotive industry, and I know, or I believe, you don't really buy a lot of that memory directly, but clearly it is used in the modules at your tier one customers to assemble, to sort of ship on to the OEMs. So I'm just curious, what you're hearing from your customers and the supply chain as to whether this is really a pricing issue, is it an availability issue, is there any sort of volume risk embedded in your outlook? And because even if it's a pricing issue, I guess, do you see any risk of decontenting?
So, as you said, Joe, we're not, let's say the exposure that we have is not direct because we're not purchasing a lot of these units. It's mostly indirect through the fact that our tier one customers are purchasing memory components. What we've been doing in the past few months, and we have been actively working on this, I think well before it was a public knowledge that this dynamics is developing, is to create maximizing our supply of these components and working with multiple vendors to ensure that we have enough flexibility to kind of mitigate the direct cost impact from specific vendors, and that we will be able to ensure that vehicle manufacturing will not be impacted by these fluctuations. And we haven't. I think that like we did last year, our forecast for this year is maybe opting for the conservative side. You can see the difference between Q1 and other quarters. It does bake in some level of understanding that there is some volatility in the industry, so we wanted to be on the more conservative side. But we haven't seen any, let's say, direct evidence or indication that there is an imminent change to volumes as a consequence. But we will keep close monitoring on this as it develops, and we're doing everything in our powers with our tier one partners to create the availability of these components.
Okay, thank you. The second question, just on, you mentioned some of the appreciation of the shekel, and I know you give very helpful exposure in your 10Qs on what a change in that currency can do to your cost base. But I believe also, like at this time a year ago, or earlier in 25, you made a comment on one of the calls about how a lot of the costs on the shekel were hedged. So did something change with the hedging strategy? Like maybe you could just sort of update us on sort of why it's a little bit maybe more of an issue now than you thought a year ago.
Yeah, so I will start with 2025. So we have a hedging plan that basically, cause that we can meet our OPEX expectation for 2025. So, for example, for the second half of 2025, the rate that we had in our financials was like 5 or 6% favorable than the average market rate. So, and these are, transactions that we made in the beginning of 2025. But as the appreciation of the shekel continues into 2026, and we're talking about, I think, 10 or 12% in the last year, we still have hedging in place for 2026. So we are more than 50% hedged on our payroll expenses at a favorable rate. But the risk is obviously heavier as the duration, gets bigger. But we took it into account in our guidance. So we took into account some, further hedging, but it will be at a less favorable rate. The fact that we are already more than 50% hedged. I think we're in a good place in terms of the rate, but it's still the year-on-year impact because it's a significant impact. It's worth mentioning.
Okay. Thank you. That's helpful. Appreciate it.
Thank you, Joe.
Thank you.
Next question, please.
The next question is coming from Aaron Rakers of Wells Fargo. Please go ahead.
Yeah, thanks for taking the question. I want to kind of double-click on the Porsche and VW and the Audi kind of programs. I'm curious, as you kind of thought about your guidance for this year, I think the initial expectation was maybe early volumes on Porsche late this year. Just give me an update on where we stand on some of those programs and how we should think about volumes, appreciating that I think 2026 in the past has been more characterized as an execution year.
2026 is an execution year. The supervision on Porsche and Audi should start Q1 next year, Q1 2027. There was some pushback of deadlines unrelated to us that pushed the SOP to the first quarter of 2027. To add something more?
Okay. And just to say that it didn't really change the plans of the project. It's just a 1 month change between December 26 to February 27. So it's not really material. And we think made clear in previous calls as well that we do not expect meaningful volumes from these programs in 2026.
Right. Appreciate that. And then as a quick follow-up, in the prepared comments, you talked about, inventory levels at your customers, your major OEMs being fairly lean. I know you've guided 10 million, IQ units this quarter. I'm just curious, can you kind of, go a little bit deeper on what you're seeing as far as the inventory levels your customers are holding? And, do you expect any replenishment when you gave the unit expectations for this year, or is it more, lean inventories continue? I'm just curious how you kind of bake that into your guidance. Thank you.
Yeah. So I think for what we're seeing, and I mentioned it also in the remarks, we are seeing increased demand in terms of order flow. So 2025 ended higher than expectation. 2026 is, constantly increasing in terms of production. But what happened specifically in Q4 was also that the orders were relatively low in the first place, as December is a slow month in ordering. It's a short month with holidays, etc. So it was low, and then production level came up even higher. So it basically means that, we believe the inventory levels at our customers are, not reaching their inventory target at the end of 2025. So they are tighter than usual, and it has some impact on Q1. But again, we're also seeing very good demand. 2026 production levels are going up. But yeah, Q1 does have some impact of Q4 low volume combined with heavier or bigger demand.
Yeah. Thank you.
Thank you, Aaron.
Thank you. The next question is coming from Edison Yu of Deutsche Bank. Please go ahead.
Hi. Thank you for taking our questions. I want to follow up on Menti. Can you give us a sense of what are the next steps with some of these customers you're talking with? I know you mentioned proof of concept. Are you going to basically ship maybe a few units, and then if that turns out well, you'll ship, 30, 40, and then much more? How do we think about that, those kind of next steps to commercialization?
I believe that 2026 is going to be maybe high tens of units in terms of POC. 2027 should be more, and 2028 should be even further. 2027 we go also into production with the production partner. So 2026 is tens of units. What we would like also is to have, in addition to the POCs, also to produce more units for the sake of Mobileye to start experimenting with robots, not only Mentee themselves. But again, it's going to be a high double-digit number of robots in 2026.
And maybe just to add, from the viewpoint of the customers in these pilots, the purpose is to start with a smaller amount of robots that perform specific tasks that they're kind of outlining, and you just go to the logistics center, for example, and there is a few shelves with boxes, and human beings today are moving boxes according to their instructions and so forth. And basically, they want to see how robots can perform over a certain period of time, what's the precision, reliability, durability, maintenance, and so on. And gradually afterwards, expand this to more and more tasks and in larger volumes. We are talking about companies that employ tens of thousands of employees today in these types of positions. And so I think it's, again, going to be a question of supply, and that's why it's so important to have a manufacturing partner, as Amnon said, that already in 27 is able to produce robots in a serious production manner, which is important both for costs and also for scale, for volume.
Understood. Appreciate the color. Follow up on robotaxi. Obviously, there's a lot of excitement coming out of CES. Has your view on owning more of the, should we say, ecosystem changed at all? And that's just in the context of you obviously have a lot of parties involved. Could that kind of hinder the speed of deployment or some of the logistical aspects? And obviously, it would require capital, but I think that's not that big of an issue anymore. Thanks.
I think that the current arrangement we have with Volkswagen and Moya is really optimized for speed of for volume of deployment. So going right now more vertically integrated is not going to increase the volume of deployment. This is something perhaps to be considered toward the end of the decade or further than that. I think what we have in place is really optimal to where Mobileye is at. Mobileye will be producing the self-driving system as a tier one, taking responsibility not only for the electronics, but also for the sensors, of course, the software stack and all the validation. And the revenue per vehicle plus the recurring revenue per mile is very, very attractive. The focus is execution now.
Thank you very much.
Thank you, Edison.
Thank you. The next question is coming from Tom Narayan of RBC Capital Markets. Please go ahead.
Thanks a lot, guys. The first one I have is on the 26, adjusted operating expenses. I think you guys said it's up $100 million. And I know that FX was mentioned, some other issues, but then the one that I'm wondering if that's the biggest piece of it is the Mentee R&D, or maybe it's consolidating Mentee if it's operating at a loss. Just curious how we should think about that OpEx going higher. What's really the biggest driver of that? And I've got a follow-up.
Yeah. Okay. So I think I've mentioned that we have incorporated Mentee R&D into our guidance. So the guidance includes, in terms of operating expenses, mainly 5% of regular inflation enhancement or comp and ben, and the additional portion is Mentee R&D. So these are the significant two items. I also mentioned we have also a headwind from the FX rate, but that is mostly offset by the efficiencies initiatives we did in Q4. So I hope that answered the question.
Yeah, just to follow up. I mean, I think that's pretty clear. But just to follow up, we do expect to have normal OpEx inflation per year of around 5%. This relates to salary and benefit inflation, as well as kind of additional infrastructure to support the AV activities and the advanced product activities. That's normal. On top of that, this year, we are assuming consolidation of the Mentee R&D expenses. We talked about that as somewhere in the lower single digits, but probably think towards 4% type of thing. And additionally, we do have this FX headwind, which is mostly offset by the workforce initiative we did in the fourth quarter, but not completely. So that should give you a decent walk from 2025 to 2026.
Yeah, I think you described it quite accurately, right? But take into account that also growing in terms of being in a tier one position with our programs with Porsche and Audi and Drive, and sometimes you need to make adjustments in terms of increasing headcount. Again, this is non-material compared to the overall OpEx but it adds few percentage. So take the walkthrough that you mentioned, which was quite accurate, and add to it, few percentage of growth that we need to account for when we are taking a tier one position and investing heavily into the future. So 2 years ago, we calculated our OpEx growth, but we cannot be precise to the single percent in an area which is experiencing the rapid growth.
Got it. And for a follow-up on Mentee, and I know this is very early to ask this question, but I mean, look, we're seeing the market's reaction to the potential news out of from Hyundai with Boston Dynamics and the credit that Hyundai is getting. Is this something you guys might think about in maybe the distant future? I don't know, about trying to crystallize the value. Right now, there's so much appetite for the capital market. Certainly, is this something you could consider monetizing Mentee in some way, or do you believe that together as a combined entity that that's how you kind of view the business?
Well, I think that the market is taking some time to internalize the news of the acquisition or the news of Mobileye entering into humanoids. I do believe that in some near future, this would create a dividend, the like of what's happened between Hyundai and Boston Dynamics. Mentee has all the potential to make big steps forward. Has demonstrated quite a mature technology, as the clips that I have shown and the clips that they have on their website. And together with Mobileye, they can make rapid steps forward. Now, whether we're going to see this dividend in a month or whether we're going to see this in a year, I don't know, but it has the potential to catalyze the same benefits that Hyundai is receiving from Boston Dynamics.
Got it. Thank you.
Thanks, Tom.
Thank you. The next question is coming from Colin Rusch of Oppenheimer. Please go ahead.
Thanks so much, guys. Can you talk a little bit about the near-term pricing dynamics on IQ? Just curious, how much movement there really is as you see some of these larger volumes move through in the first part of the year, and how we should think about that trending through the balance.
So maybe if you refer to the IQ prices, just to make sure
to volume
or prices. I didn't get the question.
I'm concerned about pricing as you ship a higher volume here, and then how the pricing trends through the balance of the year as you normalize out.
Yeah, so the pricing is every year is affected by the mix of IQs, and as you know, the IQs have different generations with different software features and software packages, and this has somewhat of a different price, but overall, on average, there's no, let's say, meaningful change in the prices. There is a different mix this year compared to last year, as Moran said in her remarks, where we see higher volumes of IQ5 base ADAS products, and IQ5 has somewhat of a higher cost, but still it's advanced products with meaningful volumes this year compared to last year. So this does have some impact, but it's all natural mix.
And also the second chip that I mentioned, the second chip that I mentioned, combined the fact that the second chip is at a lower price than the first one, so it's a higher gross profit per vehicle, but lower ASP. I think that the combined natural mix that Nimrod mentioned and second chip impact is approximately like 80 cents or so year-on-year.
Yeah, but just to clarify, this second chip or a car has two EyeQ4 chips. This is a one-off thing.
Yeah.
It's not that we see a trend having two EyeQ chips in the car with one of the EyeQ chips at a discounted price. This is what we call a bridge. This is a bridge towards EyeQ6 Lite. The car maker wanted to meet certain regulatory environments that EyeQ4 alone could not meet. Therefore, a second EyeQ4 was added. But again, this is a one-off. We don't expect it to be a trend.
Okay, perfect. Thanks, guys. And as you think about doing the driver out demonstration here later this year, can you talk about the regulatory process and any bottlenecks or hurdles that are still remaining here, things that are of concern that you guys are focused on getting ready to do that demonstration?
Well, in the U.S., it's self-certification. We have stringent KPIs in terms of mean time between failures that we are meeting towards going driverless. Outside of the U.S., there's homologation, and as we mentioned together with Volkswagen, homologation will occur in 2027 outside of the U.S.
But nothing on a regional basis or a city basis that you guys are concerned about?
No, we don't see. And actually, the homologation in Europe will have a strong tailwind, given that the vehicles are produced by Volkswagen, Level 4 vehicles, and our cooperation together with AT&T and Mobileye and Volkswagen will allow us to go through the homologation in a much easier way than if we were doing it alone.
And this is a significant entry barrier to the European market. It involves a lot of activities and direct engagements with regulatory bodies that we are already doing with Volkswagen. So getting this approval in 27, as Amnon mentioned, will also separate us in the European market from others.
Yeah, it's an important point. And just to clarify on the timing of homologation, we're saying that it will be completed in 2027 and start in 2026. And the 6 cities commercialized in 2027 that Volkswagen talked about include some European cities, which is going to require the homologation process to be completed.
Thanks so much, guys. Appreciate it.
Thank you, Colin.
Thank you. We are asking remaining analysts to please ask your question and your follow-up at the same time. Our next question is coming from Joshua Buchalter of TD Cowen. Please go ahead.
Hey, guys. Thanks for taking my questions, I guess both at once. I guess to start, you highlighted the potential for conversions on Surround ADAS this year, but you haven't made the same comments about supervision and chauffeur. Are those, maybe you can provide an update there. Are you guys, de-emphasizing that in your go-to-market and conversations with customers? And then for my follow-up, that's on a completely unrelated topic, Amnon, you've touched on this in the CES presentation, but I was hoping you could provide some more details about specifically how your EyeQ roadmap is going to accelerate Mentee's time to market, and perhaps as important, how much software development is needed to move further into robotics, given EyeQ's design specifically for autos. Thank you.
So we have multiple engagements also on supervision chauffeur. So there's definitely an active engagement there with the market. Just to put things in perspective, our relationship with Volkswagen Group with the different brands on these products started maybe in 2021, and it took us a couple of years to kind of cross all the items that is needed. And we are also focused now on opportunities that have a meaningful business potential, as opposed to smaller scientific projects that some OEMs are trying to explore. Maybe in some cases it's in-house development that they're doing, and they want to allocate one car in the future and see if it works. We're trying to focus on opportunities that present significant volumes, multiple vehicle models, with concrete timelines so that we can scale the products. We're not looking for the first opportunity. We want to kind of scale, and we have several of those. I don't want to predict timing, but we are encouraged by the activity there.
Regarding the mobility, we feel that it's too early to talk about IQ chips on humanoid robots. We think this is a longer term, this is a longer horizon issue. Currently, the robots are based on NVIDIA's chips, and we see that we're very proud of that relationship, and we see that going on for the foreseeable future. Now, when we go into really high volume production where every cent counts, then I think IQ8, IQ9 could be quite relevant, but it's not in the foreseeable future.
Okay, thank you both.
Thank you. We're showing time for one final questioner. Our last question is coming from Samik Chatterjee of JP Morgan. Please go ahead.
Hi, thank you for taking my question. This is MP on for Samik Chatterjee. My first one would be, since you said that Porsche and Audi programs are now pushed out to 1Q27, will Drive or Robotaxi be the biggest swing factor for 2026 revenues? And on that itself, any updated thoughts on the monetization for Drive in terms of upfront revenues versus recurring consumption-based revenues? And for my follow-up, I wanted to ask on the second surround ADAS customer. You said that there could be a potential decision for the second architecture with this customer in 1Q. So if that happens, will that potentially double your pipeline with that customer? That's it. Thank you.
MP, the answer to your first question is that we did not expect any meaningful impact from the advanced products in 2026. We've been saying that for the last several quarters. So there's no change related to what you talked about.
And we did not account for Drive revenue in 2026 guidance. So there is no, it's not in the guidance. Regarding the second question on the second design for surround ADAS, so the discussions are obviously ongoing, and we are making good progress. And again, don't want to go into predicting time, but we continue to work on this, and it's progressing.
Thank you, MP.
Thank you. At this time, I would like to turn the floor back over to Mr. Galves for closing comments.
Thanks, everyone, for tuning into our earnings call, and we'll talk to you next quarter. Thank you very much.
Ladies and gentlemen, thank you for your participation. This concludes today's event. You may disconnect your lines or log off the webcast at this time and enjoy the rest of your day.